Good morning, everybody. Let me just get you out of the way. All right. Good morning. Welcome. This is the second Wednesday webinar. I'm Todd Gordon of TradingAnalysis.com. We are streaming live on YouTube. This is part two. Those of you who were with us last week, thanks for coming back. We've done a lot of testing in the background, and we need to make a few changes, but not enough that we can't power through with this session. I've got a good one. Technology does need to shift in the background before we can bring guests in, and that will happen hopefully next week. So I've got a long list of guests that I want to bring, so we'll be doing that, but no guests this week. But we do have a lot of fun stuff. We're going to be talking about the markets, obviously, and let me switch over to this camera. Boom, like that. So we have a good agenda. We're going to be talking about the markets, earnings season, where the indexes are. We had I put a challenge question on. Okay, we're saying audio is low. Let me push that up just a touch. Test. Is that any better? Let me get these questions up here. Oh, good. Okay, cool. It's funny, J Van. No baby yet. Like, usually when I go to CNBC, like, they've got the agenda laid out for me. Like, this is all new. I've got to be completely organized, and I had it laid out here for you, and I do have it laid out. So let me get the agenda up here. So yeah, just a quick intro. If you don't know me, I am Todd Gordon. I run TradingAnalysis.com. You guys may have seen me on CNBC. I'm a trader first and foremost. I've been trading since even before I left college. I actually spent more time in my dorm room trading and at ski racing practice than I did in school, but that's all right. Yeah, so I've been doing this business ever since. You guys may have seen me on CNBC. I've been doing that for about 10 years. Speaking of which, I'm on at 5 p.m. today for Fast Money, CNBC Fast Money, 5:10ish, doing the charts. As Jay Van was just saying, no baby yet. We have a baby. Supposedly they tell me we're gonna have a baby around the 26th, which is Friday. So this will be our third. We have twin boys, Jake and Brody. So our baby girl is supposed to be here Friday, but I think my wife and I are joking, I think she kind of senses, like, with all the madness and volatility that's not only happening in the markets and the economy, but with 4-year-old twin boys who are just constantly going, never stopping. We're staying at our in-laws because my wife wants to be close to her doctor. We've bought a new house in upstate New York, Saratoga. So as soon as the baby comes and Trish feels comfortable, we're moving out of this temporary office, going to our new house in Saratoga Springs, New York. So yeah, so that's me. That's it. It's bonkers right now, so no baby yet. Okay, that's that. Okay, out of the way here. Obviously we've got earnings going here, so we'll talk about a couple trades. Good question there. Yeah. I see the questions coming in. We'll talk about some of the earnings trades. Futures were down, then they went back up after Boeing reported. Now you've got the futures down 0.2. Okay, that's one of the quieter Globex opens that we've seen in some time. Now let me share my screen here. Let's go like this, and bam. Hey, it almost looks like I know what I'm doing. Jay Van goes, I don't blame the baby. That's a lot that's going on. That's what we're saying. Like, she's like, I hear what's going on. I mean, Jake and Brody, I love them dearly, but boys are insane. And then you put two of them together in Grandma and Grandpa's house, where there's really nowhere for them to really play. Yeah, it's been busy. Okay. So, all right. So yeah, futures are kind of quiet. Boeing was a good one here. Let's just take a look at Boeing to start. Let me throw BA in here just to kind of give you the context. For me, and as I segue into Boeing here, I'm an Elliott Wave guy. It's what I love. It's what I've been doing for a long time. I couldn't get rid of it if I tried. For a discretionary trader, somebody who uses patterns and wants context, like there's no better methodology in the world for the discretionary trader. There's too many other forms of analysis that are much more subjective. Moving averages, trend lines. Like, which moving average do you use? Do you use the 5, the 10, 15, 21, 34, 55, 89, 144, 50-day, 100-day, 200-day? Which one do you use? I don't know. And trend lines, like which swing points do you use on this Boeing chart to draw trend lines? I don't know. I mean, dude, I've only been doing this for 20 years. I can't tell you the answer to that question. And it wasn't until I found Elliott Wave where I found out this is the guidelines. These are some rules. These are some principles that you kind of follow in order to decide whether you're in a trend or a corrective environment. This is how you draw trend lines. These are patterns that are characteristic in different phases of the wave sequence. And for me, when I read it, I was like, wow, this is mind-blowing. So I'm a big Elliott Wave guy. A lot of people say it's too subjective, but dude, all forms of trading analysis are subjective. Fundamentals, subjective. Are interest rates going up for the right reason? Or are they going up for the wrong reason? Is it good for the economy? Is it bad for the economy? I don't know. Is strong growth good for the stock market? Strong GDP growth good for the stock market or bad for the stock market? Fed's going to be more hawkish, raise rates, choke off the rally. So is it a good thing or a bad thing? You tell me. I've asked people on TV this many times and nobody can give me a straight answer. All forms of analysis are subjective. There is no formulaic approach to success in the future. It's hard work and having faith and confidence and basically lining up all the tools that you have available now to put yourself in the best trade possible in order to maximize reward while minimizing risk. That's all we're doing. Okay? So I'm an Elliott Wave guy. I welcome your criticisms. A lot of people will say it's too subjective to be of any use. It's just people fear what they don't understand. And they're too quick to dismiss it. And that's why Elliott Wave works. It's that human emotion that causes their decision-making process to create these price patterns that we study in order to set up trades. It's pretty crazy. So the reason people will say or poo-poo Elliott is the exact same reason it works. It's that same human emotion. Okay, off the soapbox, promise. Good point. Bernardo says, make sure Bernardo's my COO. He's my head guy. Make sure to subscribe to our channel and turn on notifications so you can catch him live next time. My mail's falling off the desk. Okay, so Boeing. Boeing reported, Boeing's been in a long consolidation here since Feb of 2018. We finally got the break and set. We pulled back to the retracement of last resort. The 786 retracement is the last retracement that really must hold if an uptrend is to remain valid. I don't love this rally in what I believe to be wave 1. Here's wave 2 down. It can be broken down into a nice 3-wave push. We've held 786. We went into earnings. Okay, so what happened with Boeing after hours? Let's go to trade. We'll go to active trader. Here's BA. Okay, so we went out at about 351. Reported earnings went up to 366. So again, 351 was the closing. We held the 786 retracement at $342 yesterday and rallied back sharply. This is quite encouraging. It got down as deep as it could, and let me just bring in the 786 or the 618 to show you. 618, we'll get rid of 50. Okay. A lot of times I do see that stop run below the 61% retracement, and by the time the stop run is done, the 786 will capture it. And we did a really nice reversal there. If I switch it to candles, you can see whatever candlestick pattern that is, I forgot, but kind of a reversal pattern here. So that's constructive going forward. If you take a look at Boeing, we're up at 366, and I just wanted to see, so we're $15 higher than the close. And if you look at the options market, these are the options, the 26 OX that expired Friday. They were looking for a 72% implied volatility annually. Broken that down to the life of these options is $18 higher or lower, which is what they call the expected move. So we're about $15 or $16 higher from the close, so we're within that plus and minus one standard deviation. If you're not an options trader, that's fine. So this is very, very expected. So I like it. I think Boeing is a stock that looks good technically. We're at 366. We're going to probably try to break out above the B wave high. So Boeing looks good. Verizon, real quickly, also reported. We'll take a look at him. It's not a stock I often trade, but again, pretty good response after hours here. VZ is right there. We went out at about 55. We're trading 57, so that's pretty good. The expected move for earnings was only $1, so it's actually double the expected move. Pretty good. After the bell today, we have the big ones. So these guys are going to get heated up here. We got Microsoft, we've got Visa, we have AT&T. Thursday, we have Amazon, Microsoft, Google, and Intel, and Tesla. Okay, so we're really coming into the heart of earnings here, and we'll probably start to get some resolution as to this crazy volatility that we've seen. So we have Tesla positions on. I just want to show you that, and I see all the comments scrolling through. I normally engage comments all the time, and I'm going to try to get through my agenda here. I'll show you my agenda. This is so not polished yet. We're going to have, guys, let me flip this over. We're going to have like different segments and different graphics and different jingles. Like, dude, I'm getting aggressive on this show. This is going to be awesome. So right now it's just going to be a Google Doc. But here's your agenda, and you can see we're at 8:45, so we're actually doing okay. I've got 2 minutes to do the Tesla, and then we're gonna move on. So Tesla has been interesting here. Let me just bring TSLA up here and give you the Elliott Wave context. Okay, Tesla's been a tough one. Okay, this is one of the wave counts I've been looking at, which is up in 1, down in 2, up in 3, down in 4. I hate that there's so much overlap between 2 and 4. It's really not a proper count. It's not correct. So I went back to the drawing board and I said, what would be a proper wave count for Tesla? And if you look at this count and take a second, if you know the Elliott Wave methodology, you know that each of your higher trend waves, 1, 3, and 5 need to have 5 smaller waves. Okay, so green 1 breaks down into 5 waves there. And that same concept, which is waves 1, 3, and 5 on a smaller degree, need to break down into 5 smaller waves. And maybe my fat head is in the way, so you can see it. Okay, so what if that's 1, this is 2, and Tesla is about to do the mighty third of a third rally? And that would make sense, because could Elon Musk have been any more crucified in the media, rightfully so or not? Huge. I mean, people wanted to hire hitmen on him. So if you look at the technical result of the chart, it looks pretty solid in this kind of double bottom in the 6-to-1-8 retracement. It does argue for a 3-wave move, and I'm like, holy cow. You know, if you then combine the orders on Model 3s, which are massive, maybe we got to start looking at the long side of Tesla. So that's the weekly. Let's take a look at the daily. Again, I flip around charts very quickly, and I just want you to follow what I'm doing here. I'm going to look at this ABC correction. So we go down in A, up in B, down in C. That is a very common wave 2 correction, giving us a wave 3 rally. So off the weekly, let's get more detail here on this ABC rally. So blue B, blue C, and orange 2. Weekly, daily. So there's blue A, there's blue B, here's blue C and orange 2, but we have more detail now. This is something that is a 5-wave move. It's an expanding volatility pattern known as an expanding diagonal. So this is interesting. You've got a diagonal in C of 2 into the 618 retracement. You've got Andrew Citron, who's a very noted aggressive short seller, who happens to be suing Tesla and Elon, but also just bought the stock. So Yeah, I saw that and I was like, that's pretty interesting. So you've got Tesla coming. Tesla's reporting earnings tomorrow, and we did put a trade on, and I'll show you the live trade, and there it is right there. Tesla has a measly 149% implied volatility over the next 52 weeks, and if broken down through the life of these options, is $32 higher or lower. We went out at 294, so that's going to be right around 330. So if we look at the chart of Tesla, depending on where we close today, 330 is going to put you right up above these old highs. I put a trade on with our subscribers, and let me just get I'm going to need to adjust myself out of that screen. Let me just scroll this up here. Okay. All right, perfect. So what I did is a little earnings trade, which is a call butterfly. So basically what you're doing is you sell options at the body of the butterfly where you expect the market to go. I was looking at 310, but I might need to adjust that up with our subscribers today. So we did a 300, 310, 317 half call fly with just 2 days to go. And if we go to the options graph, here's what it looks like. All right, so that's for, let's go 1025, 1026. So right now, Tesla's trading just about 300. So when the market opens here in 45, I should be up about $360. No big deal. The idea was Tesla to move up based on the wave count and exist somewhere in the body of this butterfly. And if you look at the teal number, that's when the payoff gets a little bit more worth it. 2,000, 4,000, 3,000. You want it to go right to the body of the butterfly, which is around 310. And if we move into this a little bit, and if you look at why I chose 310, in a good 5-wave move, again, 1, 2, 3, wave 3 is usually at least as long as wave 1. And that's your 100% right here at 287. Typically, a wave 3 should be able to reach the 161% relationship of 1v3. That's at 312. That's why I did the 310 call fly to try to get up to the 1.618 projection. So, you guys, that's what we do. We are options traders. For my component, my portion of the business. So we like to combine the context given to us by Elliott Wave. You know what? Let me get tricky here as I'm addressing you. We like to combine the context given to you by Elliott Wave, whether you're in a trend or a correction, what the boundaries of the trend and correction are, and then establish option trades, whether you're buying premium via debit spreads or buying options, or you're selling premium via credit spreads or condors or butterflies. We do unbalanced butterflies to skew them to make them a bit more directional, to get more delta. Again, this is only context given to us by Elliott Wave. Okay, so I believe we're the only business in the on the internet doing this, and for me, it's just it became my mission about 6 or 8 years ago when I just started to pull these two together. It's changed my trading, so that's what we do. Okay, so back to biz. Let me just make a quick adjustment there. Boom. Okay, so that's Tesla. Let me just take a break here. And I'm sorry for not addressing questions. Tesla's tomorrow. Am I crazy? Or is Tesla's tomorrow, I think, right? Hold on. What am I doing? Earnings. Tesla. 24. Oh, it is today. Thank you. It is today. I thought it was tomorrow. Perfect. Even better. That's right. I knew that. Anyway, don't claim to be the news. I'm a trader. Yeah, you're right. It is today. Thank you. Okay, good. Even better. Doesn't matter. Okay, so that's that. Let's stick to the agenda here. Tesla. Okay, let's jump into the review of the Elliott Wave positions. I was supposed to hit that at 8:45. It's 8:51. Not bad, but that's why I built in this buffer to start this at 8:30, so I can screw up and move over my time. Okay, so here's what I think is happening in the indexes. Yeah, but yeah, I see. Yep, I'm gonna try to leave some time, and I will take some charts for you guys. Yeah, I see Bob's asking for Cisco, so yeah, let me power through. Let me just get through these things, and yeah, I'll definitely take a look at some charts for you guys. Cisco, Bob's asking about Cisco. Here's what I think. This is interesting. Okay, we've broken the trend line sourced from the wave 2 low of June of 2016 in the S&P. And this is a pretty fair assessment. We catch the wave 2 low, we catch the wave 3 high, we catch all of this consolidation in early 18. We just broke through it here on the weekly chart. If this resistance around 2780 is to hold, we are likely to go down and test this big Elliott Wave channel. You remember how I was picking on trend lines earlier in the show? Elliott will tell you exactly where to draw trend lines. And the way I did this is from the low back here in Feb of 09, I connected the wave 2 and the wave 4 right there, lows, and I projected off the wave 3 highs. This does two things for you. If we are still rallying in orange 5, that upper channel projected from the wave 3 should offer a target. If we don't break down here over the next couple weeks, we're going to 32, 33, even 3,500 in the S&P. If we start to break this lower channel right here, the same one I'm describing, at the current angle of ascent, it looks to be about 25, 25. Then what I'm going to have to do is take 5 of 5, put it here, and say that is a long-term top in the stock market. I'm not ready to do that. I'm a trader where I am trying to respect the trend at all costs, almost to the detriment of Elliott. I'm trying to stick with the trend until proven otherwise. We were just short the NASDAQ. We had a really nice trade, longer-term short in the NASDAQ. I covered it. I'm basically flat. I have some SPX butterflies on, which are short vol, just kind of let the market settle in a little bit, that we'll talk about if we have time. But from that weekly chart, let me show you that big blue 4 that I'm working, okay? It's a little large. It's a little obnoxious. I realize that, those of you who are following Elliott, but I'm wondering if we're doing a triangle. A triangle typically happens in wave 4. It's 5 wave move, so there's A, there's B, there's C, there's D, and there's E for the 5 wave move. We've begun to hold a 61% C versus A relationship, so that is where you expect to hold. This is a zone of support right here in the S&P, 27.25 down to 25.90. If the triangle's going to hold, we have to hold right there, okay? And then rally up in D. That's what I'm going with. If you look down on the 195 minute, again, I've got my chart set up in a very specific way. Longer term on the left, all the way to shorter term. So let's break down green C. As I get off the daily, let's get down to the half-day chart. Look at green C. There's green C. Each wave of a triangle should be a 3-wave move right there. Okay? So I was looking at this yesterday, and I was thinking, okay, interesting. If this is in fact C, it needs to be a 5-wave move. The rally was so sharp yesterday that we actually moved into invalidation. I really can't put wave 4 up there. So fine, maybe this little guy right here is all of C, and we're ready to move up in green D. It showed really good relative strength yesterday. Yesterday, I think, was a big victory for the bulls. It was a high volume reversal. Further, if you take a look at the NASDAQ decline, it showed a lot of relative strength. The NASDAQ really didn't care very much about yesterday's sell-off. Yesterday was financials. It was energy. I forgot what else. What other sectors were under pressure, but tech wasn't participating yesterday. So along this same idea of a triangle, the NASDAQ held these October 11th lows where the S&P broke down. And there's really no way to call this a 5-wave move yet. This looks to be a 3-wave move. So I'm wondering if we're going to have a rally up here in the NASDAQ. So I don't think I'm ready to call the top yet. Okay. So those are the indexes. The one problem continues to be the small caps. Small caps are just hugely underperforming. That's an ominous sign of underlying weakness or slowing the economy. Small caps typically lead at market turning points. So I have a real problem with it, and it's hard for me to be super bullish with the small caps underperforming as they are. And I think I used to have a relative strength chart of the rut, but I guess I don't anymore. That's okay. All right, enough there. So everyone okay right there? Don, have you considered the ending diagonal on one of the indexes you're saying? If so, yes, I have, and I have it here. Don S., is that, if you're talking about, it's clearer on the NASDAQ than it is the, wait. I think it's down on the daily. There it is right here. Don S., if you're talking about ending diagonal, this NASDAQ rally has been very funky. Okay, and I described this in the YouTube video that I put out 2 weeks ago where I'm just like, this is the ugliest price action I've ever seen. This is so terrible. I just had to be short. So we strapped on some big old short SPX or NDX unbalanced butterflies, and we caught this whole move down, and it was great. I made about 9,000 on 2,000 of risk, and I did it on that YouTube video. So be sure to check that out. But the ending diagonal does possibly play in right here, Don. So I think that's possible. So it's weird, right? The NASDAQ is not broken down through these lows, but this was such a big move that if this triangle count is to play out, we really need to get on its horse and rally up here in B wave. But if this is wrong and we're just hanging out here through earnings and the NASDAQ punches through, we're heading back down to 6,000 in the NDX. So I'm playing it two ways here, man. I am not coming in here saying this is what's going to happen in the market. I don't even think the market knows what it wants to do yet. So how the hell are we going to figure it out? If she's not in the mood to deal with you and tell you what's really on her mind, it's not your job to figure out. You just be quiet. You say, yes, ma'am. And, okay, whatever you want to do. Let me know when you want to play. No, Vinny, I think it was at tier 2. Yeah, some people said the volume is low. I don't know how to do it. And let me just tell you, full. Oh, is that better? Test. Is that better? We're going to switch software. Okay, I'm going to move off of this. We ran into some technical difficulties, so next week, you guys won't know the difference, but I'm getting some training on some new broadcasting software, so whatever. So I'll know how to use it better next week. Okay, so new segment in the show. I sent a tweet out. Send me your best chart, and I want to review it. Okay, and if you guys haven't followed me on Twitter yet, it is at Todd Gordon Trade. Okay, so be sure to follow me on Twitter, and I got some really nice responses from some people. I said, send me your best chart, and I will review it on the show. So the first one up is Netflix. And this one was sent to us by Roxy Rosh. I love it. So this is interesting. This is Netflix on the daily, and I've been poring over this chart. It's been a tricky one. And he's showing us a 5-wave move down in A, a 3-wave move up in B, and a 5-wave move down in C. That's a typical 5-3-5 zigzag. And I felt like doing this as well, Roxy, and I don't have this, and I'll show you why. Specifically, it has to do with this wave 3 right here. Your wave 3 needs to have 5 smaller waves. That's not that's a rule that you'll never see me break in the Elliott Wave world. Okay? There's rules and guidelines. This is a rule. I don't have it that way. I have something different. And it's really interesting because I was on CNBC's Fast Money last week, I think, right after Netflix earnings, and I went in short. And I had downside butterflies like down here. I paid like 37 cents, $37 per butterfly. And I stuck it out there. And I was like, guys, I'm short ahead of the show. They brought me on. It was the live, live reaction to Netflix. And people on Twitter, I mean, I've never gotten so much hate tweets in my life. And I don't care. Like, if you put yourself out there like I am, you're going to get abused. But people were venomous about being short Netflix. And I'm like, God, it's hard, man. And people like, see, you're such a loser. Technicals don't work, blah, blah, blah. And we gap up on earnings as I'm being crucified on Twitter. And then look what happens. We close the whole earnings gap. And then people are like, well, what just happened? I think it's a triangle. Okay. What Roxy was doing here was he was trying to count this as a 5-wave move. Okay. And if you count this as a 5-wave move, I think you're going to see that you have challenges in wave 3. And I'll pull it back to the earnings fast money example here in a sec. This is giving me an error message for a different reason, but the problem is this wave 3 to me, a wave 3 needs to have a good 5-wave smaller subdivision like that. Okay, just like that. Just like that. You can't do this here. Okay, it's down, up, down. There is no 5-wave move here. That doesn't work. Okay, it's down, up, down. That's a 3. So for that reason, I was like, I don't think this is an impulsive decline. So I think that means this is A, B, and C. Decompose as a correction, something like that. Okay, so therefore, I'm wondering if the higher degree move is wave 4. That's A, that's B. This is C, okay? I was thinking that we might be able to break lower in the in the E wave right around earnings, but it wound up not being the case because we moved up, but it took a while to drop back down in E. So ultimately the trade would have been right, but it just happened a couple days too late. So altogether, after that earnings shakeout, I think we have a good triangle wave 4, and if 3, the C wave low at 316 holds, I think we might have a wave 5 rally. I think we have a wave 5 rally coming, and that could be quite significant over coming months. So we'll see. I think the risk is $10. The reward is $100, but the probability of success is, who knows? I don't know, but it's not 50%. I can tell you that. When you have such a powerful reward to risk ratio, usually probability of success is quite small. So, but we have a good wave count. I believe it's accurate. So I'm bullish here, tentatively bullish, and I'll be looking to add positions on Netflix. So thanks for that chart, Roxy Rush. I went through the same conversation, and for that reason, I didn't want to do it. Next one is going to be, I have a fun chart on, where is it? SPX, the S&P 500. And this comes in from X-Gem Trader. And he was asking me, Todd, is this a possible head and shoulders? Okay, is this a possible head and shoulders in the S&P? And that's very possible. You're going to have a left shoulder, you're going to have a head, you're going to have a right shoulder. Oh, can you guys see my mouse? Oh, man. Can you guys see my mouse as I'm flicking through this? And I know there's going to be about a 30-second delay until you answer answer that. I know there's a setting to show mouse. I'll figure that out. Okay. So, and Ian, what are you talking about green for? You're saying back here in Netflix, You can't see it. That's annoying. Sorry about that. Okay, that's fine. Okay. And Ian, I don't know what you're talking about. We'll see over to green 4. Doesn't matter, Ian, okay? Because here's the thing you got to remember. In a triangle, A wave sets the invalidation. Okay? Back to Netflix. A wave sets the invalidation for a triangle. Doesn't matter if this is A, B, C. So far, we did not make a new low. Okay? So this could be, C could be a flat, but it doesn't matter because you can't break 311. Okay? Do you understand what I'm saying? Triangles often extend further than you think, like you're saying, but it almost doesn't matter because A wave sets the extreme. Do you understand? All right. So back to our buddy XGem Trader, who's very active on Twitter. He said, is this a possible head and shoulders? It could be. And a lot of times I find that the S&P, or I find that head and shoulders, rather, ties in quite well to the Elliott Wave count. All right, so let's go up to the weekly where he's dealing. I'm going to show you which could be. Let's work on this count right here. You know what? Let's work on this one. I'll start with a fresh count for you. It's possible that that is the top. And a lot of times what you'll see is if it's a head and shoulders, which I'll define that in a second. Let me go over here to commentary. Here's your left shoulder. Here's your head. Here's your right shoulder. It's nothing more than 3, 4, 5 to new high, A or 1. You don't know if this is the end of the world or just the short-term pain. If it's the end of the world, end of our economy for 5 years or 10 years, that's 1. This is 2. This is 3. If it's just an ABC pullback, pain for a couple years. But this is often how a head and shoulders happens. You get 3, 4, 5, 1 or A, 2 or B to a lower high, which would be into the 50%, 618, 786 retracement, and then C or 3 down. If you take the Elliott Wave away, that's just a head and shoulders. That's going to play out like this, right? So it's 3, 4, 5, 1 or A. You get my point. Oops. Anyways, so if that's going to be the case, I think we do need to sell off here. XGem, rally back, then you break down. Neckline would be about 2,500, and then you're short down for C or 3, down to your 22 area. So I think it's possible, and I find that Elliott Wave and head and shoulders tie in very, very well. Okay. And that's the one thing I would say is, how many of you guys here are active in Elliott? Maybe you know enough to be dangerous. You know enough to be dangerous. You studied a little bit. You're proficient. I hope to build, the biggest online live Elliott Wave community. We probably have the most successful Elliott Wave trading business outside of Elliott Wave International, who we have partnered with is not the right term because we haven't combined legal entities, but we are their premier trading signal provider. They promote us very well. ElliottWave.com, Elliott Wave International has been around for longer than I've been alive. I know Proctor very well, and actually I'm going to be publishing a YouTube vlog that comes out hopefully in the next couple days where we're together, we're drinking beers on his boat, just hanging out, and so look out for that one. But our company, we've been lucky enough to be selected as their premier trading signal provider within the context of Elliott Wave. We're qualified. And what I would propose to you guys is, and I see this every now and then, is people come in who've studied Elliott and they say, Todd, your account is wrong, do this. I've been doing Elliott Wave for 20 years. I never will come in, and if somebody's following the rules and guidelines, will say you're wrong. I'm not so bold ever to come in and say and tell someone in their way of thinking is wrong. As long as you're following the rules and guidelines, you know what? Let's open our mind to what the future may hold. Let's welcome new possibilities. Let's be accepting of others. Let's listen to somebody else's point of view. And I get annoyed when I see people come in and say your account is wrong. Not to be overly direct, but we were selected by ElliottWave.com, who is the authority in Elliott Wave, to be their representative. And I myself would never come in and say you're wrong, unless you break a very common rule like wave 3 is a 3-wave move or 4v2 overlap and an impulse, etc., etc. So I would just encourage you guys to keep an open mind, because sometimes the market doesn't even know what it wants to do in the future. There could be a huge, massive institutional seller of stocks. They don't even know that they're going to be doing this in 3 days yet. There could be a huge, massive liquidation order that is going to trigger a whole bunch of orders that they don't even know is going to happen yet. So, nobody knows what the future holds. And I think the second you start to realize that in the trading world, that you don't need to know what the future holds in order to be a successful trader, you lift a lot of weight off your shoulders, take a lot of weight off your shoulders. Your mind is free to focus on things that matter. Okay? So the point is, have an open mind. Question of the day is, and if you'd put it below the YouTube comments, okay, you can put it here, or if you want on the replay, if you would throw it down there so I can go back and look at it. Either one's fine. Which trading book are you reading right now? And which one was your favorite trading or investing book of all time? For me, Reminiscence of a Stock Operator was my favorite trading book of all time. The book I'm reading now is this one, which is R.N. Elliott's Masterworks, the Definitive Collection. This is Ralph Nelson Elliott's history. Amazing what this guy was. He was big in the president, one of the presidential administrations. I think it's so bad. I think it's Coolidge. I have to go back. He was basically an economic advisor to the president in Latin America, laying out kind of behavioral finance studies. He was very good in terms of psychology, business structure, business organization. He had an accounting background. He got sick later in his life. He couldn't travel so much, so Ralph Nelson Elliott came back home. He was moving around a lot between LA and New York, and he finally, when he started to get sick later in life, just sat on his porch and laid out the Elliott Wave theory, observing hourly closes of the Dow. Amazing story that I highly recommend. So this is the one that I'm reading now. So let me know your favorite book and the book that you're reading now. All right, guys. I don't think I screwed that one up too bad, right? I'll take a couple charts here. You guys want to throw a few in there? And Paul says this is confusing. If you're new to the Elliott Wave world, it is pretty confusing. This is not a traditional investment show. Like, I got it, I understand, but be warned: if you start to study this a little bit and you get bit by the bug, you can never escape it. You're hooked forever. Yeah, we can take a look at Bitcoin. Alex, who I'm going to bring in as a guest, Alex heads up our foreign exchange service and our cryptocurrency service. He's awesome. I'll bring up his analysis here on charts. So let me just flip this over. I'll make this live. I'll show you where Bitcoin is. We are continuing to be bearish on Bitcoin. We have one more push, sub 5K. And there's been way too much bullishness out there with an underlying price structured as measured by Elliott, which does not compute. Extreme low volatility here in Bitcoin. We see this as B triangle, and we should resume in C of a whole bunch of higher degree corrective sequence that basically ends wave 4. This is your Fibonacci studies down here around 55, 5,000, possibly sub 5,000 for a recovery rally. If we start to break down and get through 5K, the sentiment in Bitcoin will really start to disintegrate. And some of those steadfast bulls will finally start to capitulate. It's at that point where you want to step in to buy. So I think Bitcoin has lower to go. All right. If you are interested, we are located at tradinganalysis.com. So we do trading first and foremost. We do analysis to back up and set up our trades. We offer free trials on our stock, crypto, and Forex service. We are all live traders. We all trade with live capital. If you're not ready yet, be sure to put your email in there and we'll send you some free content. I don't bombard you. I email you about once or twice a week. That's it. I'm not one of these guys who just likes to hammer you with free with mail every day because I think it's annoying and obnoxious, so I don't do it. So check that out. If you are not ready, if you want to take a trial, we're right there. YouTube, you guys already found me, so be sure to subscribe and alert. So let's see here. What do I want to learn to do today? How about, what do I want to learn to do? How to play Fool in the Rain by Led Zeppelin on drums. Drumeo, I'm already subscribed to. Who looks cool? I watched that one. I'm trying to learn Fool in the Rain. This one looks cool. Drumlessons.com. So I'm going to find this guy. I'm going to hit subscribe, the red button right here, and I want to be alerted when he puts out videos. So I'm going to check this guy right there. And every time he posts a video, I will be notified by a pop-up. Okay? All right, guys. Hey, hopefully that helped a little bit. Get you started for the trading session here. Futures, Los Futuros are down just a touch. 0.2 in today's Globex is nothing because it's usually plus or minus 1% in these days, so that's fine. Asian markets continue to be a major problem. Crude oil just put 5 waves down, which is also a big issue. Energy is under a lot of pressure here. We're looking to be bullish on the dollar, which is going to further pressure those emerging markets. FXI, any break through 38 is going to be a problem. So Asia is something we got to continue to focus on. All right, guys, we are going to leave it there. Hopefully that helped. We'll be back every Wednesday. And again, the session is just going to get better. We're going to have more segments, guests. I'm going to get better with this crazy software. When we're out of the temporary location, I'll have somebody helping me run the show. Yeah, so just bear with us in the early goings and send any feedback. Write it on the YouTube page because we read every comment. I wish you the best of luck trading. And if I don't see you at Trading Analysis, we'll catch you next week. All right, thanks.